Ryan, to finish off for the share team, your time starts now.
Thanks, Tim. I want to start with the fact that I think you should all know. Shares perform better than property over the long term. We believe the property data mentioned by Greg previously is flawed. It doesn't accurately reflect all of the costs involved with owning a property. Even comparing 100 years worth of flawed data to shares still do better. Shares have so many advantages over property. For example, liquidity, transparency, low costs, low entry, ease of maintenance, ease of diversification, the list goes on. The big lesson from the credit crisis is to get the basics right. Surviving the GFC wasn't about being super smart or timing exact entry and exit. It was about having the right asset allocation. This is the key to investing over the long term. It's important to rebalance asset allocations as economic conditions change. With property, this is almost impossible. You can't sell off the bathroom. But with shares, it's easy, simple, time efficient, and cost effective. With property, you expose yourself to hundreds of thousands of dollars in one property, in one suburb, and in one country. Talk about lack of diversification. Talk about risk. Any credible financial advisor will tell you, don't have your investments looking like this. That's the problem with direct property investment. You're forced to direct a larger than normal portion of funds from your asset allocation into property. Now, we're not saying don't have property. Every smart investor knows you should have something of everything. What we're saying is you should have a larger portion of your funds directed into liquid investable assets to provide flexibility to adjust your strategy as economic conditions change. Shares are one type of liquid asset. Another type are exchange-traded funds, which are investment funds that are listed on stock exchanges just like shares. With these 5 pieces of paper, I know Greg mentioned that previously, but I'm showing you this 5 pieces of paper here, you can own this. With these 5 pieces of paper, you can own the world. These pieces of paper give you exposure to every major company and economy in the world. Now that's diversification. There's no possible way to achieve anywhere near that sort of diversification through property. With property investment, you may well end up having all your eggs in one basket, but with shares, you can achieve a better long-term performance while reducing investment risk through diversification without the major drawbacks of poor liquidity, high entry, insurance and maintenance costs, and damage and vacancy risks. The Australian culture of owning your own home is a sound one. It provides a disciplined means of investing and for saving. However, if you're considering the purchasing of an investment property, you must at the very least look before you leap blindly. The lesson from the GFC is that having all your eggs in one basket can have dire effects on your wealth creation goals. Shares, as an alternative to property, have more advantages, over the long term have a better risk-return profile, and with an astute advisor, you can mitigate the vast majority of disadvantages.
Well done, Ryan. Gee, the debate's hotting up. It's looking very exciting. Now, to finish things off for the property team, Amy has a minute for her rebuttals, and then we'll find out the results.
Thanks, Tim. Look, the biggest rebuttal of them all is that shares do not perform better than property. We've already brought stats in during the last debate to support our argument that property does perform better than shares in the long term, and all of those costs that were mentioned are tax deductible, so it doesn't matter. Look, shares just can't be trusted. I don't want to sound like a politician, but they can't be trusted. I would have hated to have been working all my life, been a good citizen, paid my taxes and planning to retire at the end of 2008, and then bam, the global financial crisis hit and wiped out half of my retirement. I would have had to have kept working, been stressed, all my plans gone out the window, but with property that wouldn't have happened. The market doesn't drop by such large amounts, and because you've had the property investment for such a long time, it's always going to sell for much more than the mortgage that you've had because you've held it for such a long time. Plus you've got tenants paying your mortgage and landlord insurance will see you through any rough periods. Shares can't be trusted, but property, shelter, one of our core basic needs as humans that will always be in demand, can.
Well done. Ladies and gentlemen, give them a round of applause.